All right, so I feel like it's a fairly common thing, especially in Florida, where you're driving past that place that used to really have like a whole bunch of open land, or it used to be orange groves, and suddenly you just look to your left and it's like, wow, there's an entire community popping up, and you really can start seeing the whole process of when they clear the field all the way to building. But one of the stories I want to talk about today is something that's really unique, which is that there's actually companies going out and scooping up a whole bunch of neighborhoods that are already built, especially in the circumstance. There's this one company, Goldman Sachs, it's an investment firm. A lot of people know this. They actually bought a community for $45 million. Now, I'm going to bring in Blake Rydell, who is obviously a real estate agent and expert, also my twin brother. Blake, what can you say about this? Why is this occurring?
Yeah, so I actually brought a little prop for my demonstration today. It's a fidget spinner, right? And I want to kind of compare this to the overall economy. Okay, so if I can get this going quick enough, there we go. When the economy is going fast, it's in balance. Everything is a good investment. It could be real estate, it could be stocks, it could be bonds. But when the economy is moving quickly, everything's pretty good. But when it starts to slow down, you can see out of balance and eventually it falls off, right? And so, with that
Mm-hmm.
being said, what's happening is right now in the economy, we're in this phase. We're still moving, but it's not necessarily balanced. And you can see it's kind of spitting out of control in my hand, right? And
Mm-hmm.
so, we're at that point within the economy where these investment firms, not everything is a good investment for them, where maybe in the past they were investing in stocks and bonds and that sort of thing. Now they're starting to invest in real estate because it's a little bit more of a solid commodity. And by commodity, I mean that people are always going to need to live somewhere. And in this case, they're hoping that through real estate, they're going to have the appreciation of those homes with the home value, as
Yeah.
well as a fixed income coming in from the rental property funds that people are paying. So
Well,
that's where they are.
I think like when you talk about the fixed income aspect, that's something that's really interesting. And a lot of people forget that these properties, they don't just see appreciation, but sometimes they see a lot of rental income that can be generated. I was thinking about it
Yeah,
this way.
yeah,
If there's a community with 100 homes and you owned all of those 100 homes, and let's say that the average rent was, I don't know, 2 to 3,000. We'll use 3,000, especially for like some of these South Florida markets, right? If you
yeah,
had 100 homes
sure.
at $3,000 a month, you're making in $300,000 a month, right? Which, if
Yeah,
you
exactly.
annualize that, that's millions of dollars, close to I think 3.5 million. So, uh,
Right.
with this strategy, do you see this continuing? And how does this impact those who could have been in the market to buy, but suddenly were completely stamped out because of these big investment firms?
So I do see it continuing. It's clearly helping investors be able to kind of shore up their funds, their assets. And at the same point in time, real estate has a lot of different tax write-offs. They have a 1031 exchange. They have a depreciation schedule where they're able to write off some of what they've invested into the properties on their taxes. So I do see this continuing to go. I also see that some of these investment firms are actually buying these properties and then building their other brands around them. So, for example, in the area where I live, I see some buildings that are being built or bought by investment companies, and then they're putting other brands around them that they might own equity in, such as food, shopping, entertainment, those sorts of things. So I do believe that this is going to continue. We're going to see a hybrid style of living where these brands continue to kind of be consolidated around one area for the ease of access for the consumer. So, yes, it will continue. Is it good for the economy? Probably. Is it bad for personal freedom? Yeah, because basically this is going to make more families stuck in the system of renting instead of buying.
Yeah, no, I totally agree with you there, and I think that that's one of the unfortunate parts about the free market sometimes, which is like these big companies, these big corporations can come in, obviously buy a staple to American life, and then force you to have to rent that or obtain that in some other way, all the while driving up prices for everyone, including themselves. So here's the funniest part that I thought about this is, let's say that property values continue to appreciate, right? We've
Hmm.
seen Florida values specifically in this location that was bought going, 100% of what they were a decade ago, right? I mean, literally doubling their money. So with that being said, it's really remarkable to see how these companies have the power, and it's almost a win-win situation for them. It's truly
Yeah.
remarkable.
Yeah,
So
they get
it's
to be
crazy.
able to keep, like you said, their assets. They're in full control. They get tax write-offs, and on top of the control and the tax write-offs, they're making pretty much a fixed monthly income coming off of these properties. It's a great, great deal for these companies and investors.
Yeah, yeah, it's a great deal. Unfortunately, like I said, I think it's a win-win for them, but a loss for a lot of Americans. We'll see what happens with this story, and we'll continue to follow it. I think it's a big story that no one's talked about, and it's amazing how this just kind of gets swept under the carpet. It's amazing. Anyways, Blake, thank you so much for being here. I really appreciate your insight,
Thank
and
you. Yeah.
yeah, can't wait to have you on next show.
All right. See you then.